Hello, welcome to supercharging a whole life policy into a private family bank. First, let's understand how life insurance works. Here's a good way to start understanding life insurance. Think of the premium paid as two parts. One part is going to the death benefit for your heirs, and another is going to cash value. The more premium that is going to death benefit depends on your age and health, of course. And then the rest goes into the cash value. Well, which part is more important to banking? Cash value, of course, because we're talking about building your money pool. Here at Private Family Banking, we use different techniques than a typical agent does. It's not that their way is wrong, it just doesn't meet our objectives. The best way to work when you are building something is to keep in mind what your goal is. Our goal is to maximize the cash value used for banking, unless our client asks us to work differently. Our goal is to get the tax advantages allowed to you without going into what the IRS calls a MEC. We'll talk more about that later, since it's really important. So, let's understand how the three major kinds of policies work. As an example, let's compare three kinds of policies, each paying in premium of $5,000 annually for 4 years. The first is a term policy, and as it is graphed, it's a flat line, as there is only a death benefit, no cash accumulation at all. Next, there is a typical whole life policy. This type doesn't accumulate cash value for the first several years, which is actually not conducive to banking right away. It will take off eventually, and it has all the great guarantees that you want. But now, those of us wanting to get all the tax advantages right away and want the great growth, immediately we'll structure your policy to be supercharged right away, graphing so you can see the terrific accumulation from the beginning. We are allowing the optimized private family banking cash to grow more quickly, giving as much as 40% more than the typical whole life policy due to immediate compound interest. There are similar components with a typical whole life policy, and there are others as well. Now, this graph is an animated showing of how the same premium dollars can be allocated differently in each policy. Our graph here flows from right to left, with no cash value on the right and moving to an increase in the cash value. Along this line, you will have lesser death benefit, as we shall see. Now, if I allocated 100% of my premium to a death benefit, I'll have a term policy, thus giving me the maximum death benefit and no cash value. Clear on the other side of our graph, a big single premium can be put into a policy which will buy the insured a minimum death benefit, yet with the maximum in cash value. So you can see that the right side gives max death benefit, no cash. The left side gives minimum death benefit and max cash. Now, there is a downside to single premium policies. In 1988, the IRS drew a line in the sand saying that this is just too good a policy, too good of a deal. We're not getting taxes off the people, and we don't like it. So, any policy that accumulates too much value with too small of a death benefit will become a MEC, a modified endowment contract. So, let's continue with our learning about life insurance policies. On the right side after term, which has no cash value, we put the ordinary or whole life policy. This is the typical agent's go-to, but you have seen that it takes several years to build any cash. Moving along the line toward more cash is the life paid up at 65. Since this policy must be self-sustaining in your older years, it will build cash even faster for you. Now there's the 20 paid life policy. You can assume correctly that this type will build cash even faster. Of course, you also know that each of these policies will have a lesser death benefit. Allocations in any of these will be geared less to the death benefit and more toward growing cash. Yet, even those policies are not as beneficial to your banking. So let's see how to supercharge your policy. While there may be a place for this MEC policy, your focus is toward the cash and the tax advantages offered. That's why we build your policy as close to the MEC line as possible without crossing it. Say hello to your private family banking policy. Why make a banking policy for yourself? Tell me why again. To keep all that interest that you and everyone are paying to outsiders and financial institutions. You're used to paying interest on your mortgages, credit cards, and cars. Yet now you're the banker. With your banking policy, your premiums and profits grow your money pool, tax-free, so you can float your own loans and pay yourself back for all the things that you live for. And again, you're doing it tax-free. So see me, Sandy Henderson, partner and Chartered Retirement Plans Specialist. I'm on the website at privatefamilybanking.com along with the rest of our team. To build your policy, you can call or text 316-347-5375. That's Sandy. I'm looking forward to talking with you anytime. Thanks. Bye now.